Welcome back, everyone. This week has been pretty boring in terms of the market. Most of the week was spent anticipating what Jerome Powell was going to be saying during the Jackson Hole event to get insights about when the Fed might start tapering their asset purchases. So we'll talk a little bit about that. And I also wanted to briefly go over a new company that I'm going to be adding to my portfolio next week. It's a real estate company that owns some pretty iconic buildings like the one seen here in Las Vegas. So the big news for this week was Jackson Hole. Everyone wanted to get a time frame on when the Fed is going to start tapering. Powell made pretty clear that they will start tapering before the end of the year. The announcement may come as soon as September 21st or 22nd during during the Fed's upcoming meeting. The market was already expecting the taper to probably happen sometime this year, so there wasn't really a big reaction when this came out. And another question that the market had was if there were going to be any updates on the timeframes of interest rate hikes. Here, Powell said that the timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. The Fed is still waiting for unemployment rates to come down across the board before they start raising rates again. Powell also continued to iterate that inflation still looks to be transitory, and they are finally meeting their goal of an average 2% inflation rate, thanks to the spike in CPI over the last few months. Overall, the market took his speech in stride. The markets were up some on Friday, but there were really no dramatic moves up or down in any of the main three indexes, except for the Russell, which was up about 3% today. Now let's take a look at what happened this week in the market. My portfolio is up a whopping 70 cents, just barely making a gain. The S&P 500 is up a little over 1% in the last week, and the QQQ, which tracks the NASDAQ 100, is up just under 2% this week. In terms of individual companies, my top performer was Texas Roadhouse, which is up 6.6%. Financials also had a good week, with Bank of America up just under 6% and JP Morgan up 5.6%. This week has really seen a move towards riskier assets and a move out of the safer ones. So the safer companies I have, like Johnson & Johnson, Pepsi, and all of the utility companies I own, dropped this week. Overall, though, there wasn't any crazy news that came out. It's really just the normal fluctuations of the market. Moving over to my diversification, I use this to show what sectors I might be underweight in based on the targets that I set. And right now, I'm most underweight in real estate. So I've spent the last week looking over a wide range of different REITs across several different sectors. I already own two REITs, Realty Income and Store Capital. These both own similar types of real estate, so I wanted to make sure I went in a different direction. I finally landed on a company that I saw in a video by Joseph Carlson. If you haven't seen his videos before, I highly recommend it. I'll leave a link in the description. A few weeks ago, he went over the company VICI Properties, which owns a lot of entertainment and casino buildings and some of the really iconic buildings in Vegas, like Caesar's Palace. I'll put a card to Joseph's video about this company because I think he goes over a lot of the really qualitative different aspects of this company, talking about their business model and some of the buildings that they own. So I think that'd be a good place for you to go and watch him there, so I don't have to reiterate everything that he already mentioned. But I'll mainly be talking about some of the financials of the company and how they've been growing over the last few years. So as of recording this video, VICI had recently closed at $30.52 a share. Unfortunately, they have been going up in the last few days, so I was hoping that they would stay a bit lower so I could get a good price on them, but they're still at a price that I think they're worth buying. It has a forward price to funds from operations ratio of 15, which is a lot lower than some of the other ones that I was looking at, and it pays a 4.8% dividend. Since VICI is a REIT, it will have a higher dividend payment than what I would normally have in my portfolio, but that's what REITs are really for, is for their yield. Going into their financials, they have a revenue growth rate of over 300% year over year, which is obviously not going to be able to continue forever. They had a really low revenue back in 2016, and it's now grown to over $1.2 billion. They also have an adjusted FFO growth rate from here to here of 28.6%, which is from 2019 to 2020. So this is into the pandemic. They were able to grow their adjusted FFO 28%. They've also been growing their dividend pretty quickly. They just recently rose their dividend from 33 cents to 36 cents, which is about a 9% increase, and they now pay $1.44 per share a year. Another good piece of news recently is that they are buying MGM Growth Properties, which is giving VG another 15 properties and makes them one of, if not the largest, landowner of the Vegas Strip. It also diversifies their revenue. Instead of 100% of it coming from the company Caesars, it now will only represent about 41% of the revenue. Now, of course, this company isn't going to be perfect as an investment. There are definitely some risks that still loom out into the future, with the obvious one being the coronavirus. With the continuing growth and the spread of the Delta variant, some states are starting to reinstate restrictions and mask mandates. Most recently, Illinois will have a statewide mask mandate starting Monday. Vici was able to collect all of their rent during the pandemic, and their residents should have enough cash to continue to pay during this time if they are forced to close down the casinos again. If things get worse, I think Vici will continue to be safe, at least for a while. If they have to close down for, a few years, obviously there will be some problems that'll come from that. But I don't think that's very likely to happen. So overall, I think this will be a pretty good investment to add into the portfolio and give me some diversification away from the two REITs that I have right now, which mainly own safer real estate for companies like Walgreens, Home Depot, and those kind of places. As for the size of the position I want to take, I want this to be smaller than the other two REITs that I have. So I'll likely, if I go here to a little pie graph that I made for the real estate ones, I'll probably keep this somewhere between 10 and 20% of this total pie. As we get more information about what's going to be happening in the future with the coronavirus and how the company is continuing to operate during that time, I'll reevaluate how large of a position that I want. Because if it looks like things are going to get better and the share price still hasn't really reacted, then I'll definitely start buying more and more, because I think it will be undervalued at that time. If restrictions do start to come back, especially to Nevada, I think Vici will fall a lot harder than some other companies would, and that would give another good buying opportunity. Because if we go here where we can see the drop from the pandemic, it dropped over 50% from its highs before it reached a bottom of around $11.20. So if it would even fall half as much, so like down to like the upper teens, it would be a great time to buy a ton more of this company, because they really didn't suffer too much during the pandemic, because their tenants were still able to pay all of their rent. So as long as they're able to keep up getting all their rent payments, they should be in a good spot even through some tough times in the future. So sometime next week, I'll be initiating my position with a couple $100. So that'll get me around 5 to 10 shares, maybe, depending on how much I feel like buying once the time actually comes. And this should bring in some nice additional income with an almost 5% yield from the money I'll be putting in there. And with that, I want to thank you all for watching. Not a lot of news to go over this week, so it's going to be a shorter video, but that's all right. Hopefully next week we got some more news to be talking about, and hopefully my portfolio does a bit better than just barely giving me anything with a whopping 70-cent return. But yeah, I want to thank everyone for watching. Make sure to like and comment on the video and subscribe if you enjoyed. If you have any questions for me, you can leave them in the comments or email me at jacobmorrisinvesting@gmail.com, and I will get back to you as soon as possible. And I can also read them out in the next videos and answer them there if you would be alright with that. But yeah, thank you everyone for watching. I will see you next week. Bye.